do complete problem 2.5. So we're going to start here with, these items are taken from the financial statements of Donovan Company at December 31st, 2014. So it gives us a list of accounts, and it proceeds to tell us, prepare a classified balance sheet. Assume that $13,600 of the notes payable will be paid in 2015. So basically, a classified balance sheet is one where we segregate the assets from current assets and non-current assets, and we show the liabilities as current liabilities and non-current liabilities. And then we have the breakdown of the property, plant, and equipment section, the intangible assets, so we break it all down. So let's just at least start with a format for our balance sheet, and we're going to add to it, okay? So what we'll do, let's start an Excel. Let me just start. Well, it looks real easy when someone else has the solution sitting here.
No, yeah, it looks easy when you
Okay.
start reading it. It didn't look that difficult.
Okay, so basically what we're going to do, I can't say there's one more important thing than another, but the title is very important. I'm going to just keep it all in caps so I don't have to go back and forth. So Donovan Company, and we're going to say the balance sheet, and we just show a date, because what is a balance sheet?
Snapshot.
A balance sheet is a snapshot on a particular moment in time. So we're going to basically show the title. Then the first thing we're going to show are assets. The first headline will be current assets. Then we're going to come down to property, plant, and equipment. Do they have any intangibles at all?
No.
Okay, so, and then we're going to have ultimately something that is total assets, okay? Actually, then we're going to come down to our liabilities. We're going to have current liabilities. Do we show non-current or long-term? Every book does it a little different. Long-term liabilities. And then, do we have intangibles?
No.
Oh, excuse me, that's on assets. And then we have total liabilities. Then we have the stockholders' equity section, or do we call it retained earnings here? Stockholders' equity. Stockholders' equity. And usually with the stockholders' equity, we have a section that's common stock and a section that's called retained earnings. Okay? So we've got our common stock, and they're not making us do a retained earnings statement, so we'll have to just do our retained earnings, and then I believe start with the beginning balance. No, we just total it. Okay, so let's go back here. Let's look at the book, and let's look at what we deem our current assets. So current assets are those items, resources that could be converted into cash within the year, or to be liquidated within a year. Cash is our first one. That's always going to be recorded first. The accounts receivable, those are monies that we're expected to receive in the very near future. So that's going to be our second one. Prepaid insurance is going to be created or liquidated into cash because we're going to use up that prepaid insurance in the current period. Is there any inventory? So let's start with those, okay? So the first we've got cash is $11,840, and you guys just help me remember the numbers. So we've got cash of $11,840. And we've got accounts receivable.
12,600. Yep.
12,600.
And then we've got prepaid insurance,
3,200.
$3,200. And do we have any other current assets? I don't know. That is it. So then we're going to do a total current assets. And basically, I'm going to summarize these three. Then we've got property, plant, and equipment. The first property and plant and equipment we're going to look at here. We have buildings. We have equipment. What about land? Is land a property, plant, and equipment? Right?
Sort of how, so yeah.
It is.
So what we need to do is we need to combine the property, plant, and equipment together. Now, the one piece that maybe some of you got confused, those accumulated depreciation accounts
Right.
are contra accounts. So they need to go against the equipment or the property. So we're going to start by putting in land, and that amount is 61,200. Then we're going to say building, and how much is that? 105,800. And then we're going to say less accumulated. I'm just going AD building. Okay? And how much was the accumulated?
45,600.
45,600. So our land is basically $60,200. Then we've got equipment of how much?
82,400.
82,400, and again, less accumulated depreciation on equipment is what?
18,720.
So our balance here on this is going to be the 82,400 minus the accumulated depreciation. Remember, with assets that get depreciated, we want to know the original cost. And we want to know how much depreciation has been taken on that account in total since we own that asset. So when we show it broken down like this, technically a lot of companies just show net assets. Like they'll show building net. So that means after the accumulated depreciation. But for our purpose, we need to list it. So really the adjusted basis on the building, if we were to sell it, the adjusted basis is what we would report our gain and loss on. But we want to know what we originally bought it for and how much we've used up or expensed since the inception of that asset. Does that make sense? Okay, so then we have our building and equipment. What other assets do we have? Any others? Equipment, land, building, we're done.
Yep.
So,
Now just total assets,
We can go total.
now they don't do it, but I would do a total PP&E, and I would make that and then I would show total assets, and I would combine these two columns. Again, everyone has different ways of doing it, but the key with this is that you spell out and break down the various classifications of the balance sheet. Okay, so there are our total assets. Then we're going to go to the total liabilities and stockholders equity section. Liabilities and stockholders equity. We're going to start with our current liabilities. Let's go back and look here.
Can I ask a question of the class? Who here, when they did the bottom, came up with a slightly higher number than that 212,720?
I don't remember, I know it was different.
Mine was like
Okay.
199.
Yeah, mine was less, I think.
Mine was like 215.
Okay, we'll see why.
Alright.
Okay, so now let's look at these. We know a payable has the word payable or a liability, or we also know unearned revenues are a liability. Now, accounts payable are a current liability because we're going to have to pay that money within the current operating cycle. We know unearned revenue, we're probably going to complete those services within the current operating cycle, so that's a current liability. When we're dealing with mortgages and bonds and notes, generally those are non-current liabilities. However, the amount that needs to be paid in the next operating cycle within the year is the current part of that long-term non-current liability. So, what do you guys think we have for some current liabilities?
Accounts payable.
AP,
Accounts payable, what else?
13.6 of the notes payable.
13.6 of the notes payable. What else?
Interest payable.
Interest payable. So let's put those in, guys. So we're going to basically show accounts payable of 9,500. Okay? We've got the current maturity of the note payable is what? 13.6. What else do we have? Interest payable of 3,600. So then we're going to show total current liabilities is going to be 26.7. Now let's talk about long-term liabilities. We only have one.
80 and notes payable.
Notes payable is going to be 80. Now, how did you calculate that?
93.6 total minus
Minus the
13.6.
Perfect.
Yep.
So we've got notes payable of 80. Okay? Then those are our long-term liabilities. Okay? So our total liabilities here basically will be the 26.7 plus the 80. Does that make sense so far? Now let's start on our stockholders' equity section. How much is the common stock?
60.
60. Now let's go to retained earnings, and I bet you this is where you got confused. The retained earnings, let's look at this. We have service revenue here of 14.7 because the retained earnings starts with a beginning balance. What do we add to it? Net income. What
Minus
do we-
dividends.
Minus dividends. Okay, so let's just kind of do a little net income statement on the side over here. Service revenues are how much?
14, what does it say?
14,700.
14,700. What expenses do we have?
Insurance.
Insurance is how much?
780.
780. What else do we have?
Interest expense?
Interest expense of how much?
2,600.
What else do we have?
We don't-
Depreciation expense, yeah?
Well,
Did we not add that?
I know the total should equal 8680. I remember that one.
It should
How
equal,
about depreciation expense?
depreciation expense is how much?
5,300.
5,300. So we need to say depreciation